some companies do so bad for so long that some investors label these companies as Kachra companies. And if at all, rarely when there is a change in the ground reality of these sectors and companies, our perception as investors is much slower to change versus what is happening on the ground, right? And I believe something like this is right now taking place in the wind energy sector. So in this video, I want to share whatever I've learned because I had some of these questions myself. And I want to share whether there are actually changes taking place. If there are changes, are they more structural or long-term in nature, or are they short-term changes? Because obviously the stock price has done exceptionally well over the last 3 months for both Suzlon and Inox. But then again, everything else has done exceptionally well in the stock market as well. So keeping that aside, let's explore what is really happening in the industry right now, right? Now, having said that, before we start, I just want to give out the normal disclaimers that I am actually invested in these companies. So my views can be biased, but then again, the whole purpose of making this video is for purely educational purposes. And the reason really that I made it is because I had some of these questions myself 2-3 months ago when I started doing research on this sector, and I just wanted to share that with you, right? The second thing is, obviously, we're trying to grow our YouTube channel. We want to hit 2,000 subscribers. If you like anything about this video, please do the needful. And with that, let's get started. For the purpose of this video, we're going to do a top-down analysis, which means we'll start off with the power sector as a whole, get an overview, get an understanding of the sector. Then we'll go one layer deeper and understand the place that wind energy occupies within the energy mix. And then we'll go another layer deeper and try to do the fundamental analysis of the companies within the wind energy sector, Suzlon and Inox, right? So let's start off right at the top. The power sector. The first question we really want to ask ourselves is, how does electricity reach our homes? And this is a 4-step process. The electricity supply chain comprises of generation of electricity, the transmission of electricity, the distribution of electricity, and fourth, the consumption, right? The generation part this is where all the power plants are and the different ways in which power is generated, whether it's thermal power, coal power, bio, hydro, solar, wind, etc., nuclear. Once the power is generated, it is used, it is stepped up in voltage because a higher voltage current is easier to transmit and carry over long distances. This is done through transmission lines. Once that happens, the discoms take that power, step it down so that it can be further sent to consumers for usage, right? So this is how the supply chain works for electricity. Now, the second important question that we want to ask is, as consumers at least, what is even 1 unit of electricity? What does that even mean, right? So every appliance has a certain watt rating. This means that this appliance will consume certain watts if it is switched on for 1 hour. So if a bulb has a 100-watt rating, it means that if you keep that bulb switched on for 1 hour, it will consume 100 watts of power, right, or energy. And if you keep that bulb switched on for 10 hours, it means it will consume 1000 watts, right? 1000 watts of power consumption equals 1 unit of energy, right? So taking that analysis or taking that understanding, if we go down and look at some of the other sources where we consume energy, let's take an AC, which is a 1.5 ton AC with a 3-star rating, right? So according to the wattage of that AC will take 45 minutes to consume 1 unit of electricity. Let's take a laptop that will take roughly 25 hours to consume 1 unit of electricity. So now let's get a deeper understanding of the different sources of power generation that we as a country have. In front of your screen, you can see that the distribution or the breakdown between fossil and non-fossil on the left-hand side of the graphic is 57.7% comes from fossil fuels and the remaining 43% comes from renewable energy. Within renewable energy, 43%, 10% of capacity, installed capacity, comes from wind, which is basically 43 gigawatts, right? Now, the reason why I'm stressing on the word installed capacity is because installed capacity does not equal to generated capacity, which means the capacity of different sources of energy generation are different, and therefore, the actual generation of electricity is going to be a different number. So what I mean by that is, so if you look at this chart now, the capacity factor, which is what is the maximum utilization for that capacity, we can see that geo and nuclear are almost 0.8%, whereas the renewable sources of energy, let's check out wind and solar, are actually close to 20%, right? So that's why even though coal and fossil fuel is 57% in the installed capacity, actually generation, the power generated today, 65 to 70% still comes from fossil fuels, right? Having said that, there are some interesting trends we can pick up from the graph. First of all, why is it that the capacity factor for wind is actually slowly trending up? And the reason for that is, over time, the wind turbines of the wind, the height of the wind turbine has actually increased. So the higher up you go, the higher the wind speeds, and the higher the wind speeds, the higher the utilizations, right? So wind has actually become more and more efficient over time. And that's why you see that slight increase in that capacity factor, right? But coming back to the power mix, if you look at the trend historically, we'll see that there are two major years where some significant changes have happened in terms of the capacity added, right? In terms of the power, right? The first one is, and we're looking at the bottom graph here, the first one is that 2012 is the first time that we see that some renewable capacity has come on the radar, right? Capacity is being added. And this is seen by that little green column that we see in 2011. So 2011 to 2015, the capacity addition for renewables is actually pretty low, right? There's not a big jump. Meanwhile, the thermal or the coal power addition, right, energy generation from coal, that capacity, those capacities are actually increasing fairly consistently during these years, whereas as soon as we get to 2016, they kind of tend to equal out, and 2017 onwards, the trend has shifted towards renewables, right? The reason why I'm stressing on this is because if you want to find out whether the changes in the renewable space are structurally driven or they're one time, we need to see the trend historically, at least to get an idea, and we'll go more into detail a little bit later on, right? But so 2017 onwards, there has been a much higher addition of renewable energy capacity, right? But this does not give the complete picture. If we actually zoom in to what is the composition of this renewable energy capacity that is being added, we find that a bunch or most of it is actually coming from the solar power, and wind is actually a much smaller mix in the total. And currently, as on March 23, 53% of renewable is from solar, 34% is from wind, which is the second highest, and the remaining is from biopower, small hydro, etc., right? But here's the thing, right? If we go one layer deeper and get even a deeper understanding, we see that in terms of capacity additions from the wind energy particularly, there has been a huge variation. So between 2014 and 2017, the capacity addition went from 2.1 megawatts per year to all the way up to 5.5 megawatts. And then something happened, and there was a huge fall, right? And new capacities simply did not come up. So in 2017, because of a variety of reasons, probably because looking at the recent performance of wind energy sector, the government decided that the policy support the wind sector was getting was not required anymore, and that the industry had matured and that they should be open to competition. Because as a government, what I want is not necessarily to support solar or wind per se. What I want as a government is to get the lowest cost of electricity possible. Of course, I want to keep a percentage of my power mix as renewable because that's better for the climate and all that. But the main motivation is always lower cost of energy, right? And around 2017, when a shift in the attitude of the government happened away from wind towards solar, another reason was that there were a lot of innovations happening in the solar energy sector, and the levelized cost of energy what they say in the industry, was falling very rapidly. So the government decided that we're going to change the regulations for wind, right? Make it more competitive, let these guys compete and lower the cost of energy. And we're also going to push solar a lot more because that seems to be the cheaper alternative. Now, as a result of this change in strategy, the first significant change or policy change that the government made was they removed or they changed the mechanism by which the awards or the bidding used to happen for the previous tenders, right? So for example, now what happened 2017 onwards was that if I'm Suzlon and I bid for a 100 megawatt project and I bid at 3 rupees, so I say, at 3 rupees I'm going to be able to supply power or whatever, the competitors could actually look at my bid and come in and say, I'm going to be able to build this project at a cost of 2.95 or 2.9. And so in a bid to actually undercut and compete with each other, the cost of energy from wind projects actually decreased quite a lot. But because the cost was so low, they actually became unviable. Those projects became unviable, and even though competitors had actually bid for those projects were never completed. And as a result, as you can see, there was this horrible period from 2018 to 2022 where the industry just made losses. On top of that, because the recent up until 2017 the industry had done so well, so many people had actually entered the industry, so many people including Suzlon, including Inox, had put up a lot of capacity, they've taken a lot of debt, and all of a sudden you have the top line disappearing whereas the debt still remained. So there was just a terrible period of very, very low profit. Well, there was no profit. I mean, it's mostly losses for 5 years straight, right? And in the case of Suzlon, even before that. So that was the situation leading up to 2022. Now in 2022 something happened. Okay, government changed its stance again. They said, okay, we've seen solar has actually done quite well, and we are seeing that wind industry is getting totally destroyed. So there's something needs to be done. And the first thing the government did was in July 2022 they agreed to take back the reverse bidding mechanism, which was forcing the industry players to outbid each other in the race to the bottom, right? So that was removed. And in January 2023 the government came out with new regulations and they said that we have definitively changed or gone away from reverse bidding. We're going to introduce a new mechanism to bid, right? So as a combination of all of that, a kind of new tailwind began to emerge in the industry, right? And just to summarize some of the big changes that were made because of these policy changes was, first of all, e-reverse bidding was discontinued. Second was that wind bids of 10 gigawatts per annum with state specific bids were also going to be kind of provided. The third one, and this is a big trigger you can say in terms of for the investor, is that until June 2025 any new projects that are added, they're going to be added where the power developer they're not going to have to pay the interstate transmission charges, right? So that's another policy favorable change, right? So and another one is that now the discoms or the distribution companies, when they purchase power from the generation companies, now they have a renewable purchase obligation, which means a percentage of the total power they have to purchase for wind. There are some very fundamental reasons that are also driving these policy changes. The first one is that wind and solar are now one of the cheapest forms of electricity sources, right? Not only are they cheap, but they're 33 to 43% cheaper than conventional sources of power generation, which is thermal power, right? So not only is it cheap, but it is also green, right? So all the more better. So those are some of the reasons. The second reason is from a grid perspective. Now the power grid is basically like the highway for electricity movement. So a power project that generates power in Gujarat, that electricity is not necessarily going to be used in Gujarat. It might be used in Andhra, it might be used in somewhere in the south or the north, right? The way electricity is moved is through the grid. And from a grid perspective, it is very important that the power that is being input into the grid is consistent or uniform in nature. If it is very intermittent, meaning sometimes you're going, There's a lot of power being input into the grid, other times not at all. So that inconsistency makes the grid unstable, and that is not good, right? So from that perspective, wind and solar combined are actually the much more uniform versus only wind or only solar, because solar works during the peak hours of the day. Other than that, at night or even in early morning, solar is doing nothing. Wind is relatively more uniform, but then during the days, wind tends to be the worst. So if you combine the two, and if you look at the chart, the combination of the two, which is the top line, is much more uniform compared to wind or solar. So now there is a trend that hybrid projects are being preferred over wind or solar, right? So that's another key reason. The third one is that obviously India has made some commitments in terms of how much power we want to, how much of our energy we want to get from renewable energy. And Prime Minister Modi made some commitments at the COP26, and obviously we have to try and fulfill those obligations as well. Now let's go one layer deeper onto the company level, right? So the first thing we want to do as analysts is to analyze the OPM, or operating profit margin, of a company, and we want these margins to be ideally as stable as possible, right? So if we look at the operating profit margin of the consolidated businesses of both Inox and Suzlon, we see that they are extremely volatile, right? Now let's break this down into different periods. Let's break it down to pre-2017, 17 to 2020, 21, and then the latest 2-3 years, right? So we see that up until 2017, Inox is a lot more stable, whereas Suzlon has been increasing, right? The reason why it has been increasing was that Suzlon already was going through a lot of changes. They had taken a lot of debt. They were forced to kind of sell some of these companies they had acquired across the world. And because of the high operating and financial leverage leading up to 2017, when there was a bit of a boom in the industry, the whole operating and financial leverage kicked in, and therefore the margins were higher. Now obviously post 2017, everything crashed, and both Inox and Suzlon, both their margins crashed between 2017 and 2020-21. Recently, however, Suzlon has been a lot more stable, and it is also positive, whereas Inox has not yet recovered quite as much, right? And by the way, these things are going to reflect in the stock prices. I'm going to show you the stock charts of both these companies in just a minute, right? So that's the operating profit margin profile. Now the thing is, this is not the best way to look at these businesses, because within these consolidated operating profit profiles, OPM margin profiles, there are actually two types of business. The first is actually the wind turbine and generator and the assembly and the EPC, the difficult part of the business, where both these companies are not necessarily very profitable, right? And then there is the nice cash flow, annuity, regular, stable kind of business, which is the operations and maintenance business, right? So what happens is, once you've installed the wind turbine and the wind towers and everything, then these wind turbines and they require regular operations and maintenance. So these operations and maintenance are obviously usually taken care by the company that delivered or installed these turbines in the first place, right? So in this case, obviously we have Suzlon and Inox, right? And so if you look at the operations and maintenance side of the business for Suzlon, we see that the EBITDA margin, or the operating profit margin, is much more stable. It's close to 45%, and the EBITDA is 750 crores, right? And yet on a consolidated level throughout these years, the company was doing terribly, right? Because the debt was really high, and the other business, the front end of the business, the installation of the wind turbine themselves, was not doing great, right? Even the profiles for Inox are very similar, although they haven't given the business wise data for operations and maintenance separately, so that's why we cannot, I haven't showed them here. And then we look at the operations and maintenance side of things. The Suzlon has around 13 gigawatts under maintenance, and Inox has 3.1 gigawatts. In fact, Inox has gone one step further, and they said that if you're an investor and you only want to invest in the stable operations and maintenance business, you can actually buy, they've separately listed the Inox Green Services Limited, which is only and only the operations and maintenance side of the business. And they're saying that they'll be able to grow the portfolio under management from 3.1 gigawatts to around 6. They want to double it over the next 3 years, right? So that's the dynamic in terms of the business. And on a net profit margin basis, I mean, it's been terrible, okay, over the last 7-8 years, right? The more important thing we want to note is one of the reasons why they were doing so terribly was not so much that the industry turned, but when it turned, they had a lot of high debt. And we see that in the case of Suzlon. Suzlon is particularly particularly exposed to high debt in the last couple of years, in the last 10 years. And because of that, they've had to undergo debt restructuring at least 3 times. And if you look at the number of shares, the sheer dilution that has happened from 2013 all the way to 2023 is just, I mean, the dilution has happened because they have to restructure, they have to sell or convert their debt into equity. And it's just been a total horror show, right? And so obviously when something so bad for so long has been happening, I mean, no doubt any rational investor should question the company and the management and all that, right? In terms of Inox has also undergone a lot of changes in terms of debt. They were also indebted, but because Inox belongs to the Inox group, which is a very, very let's just more financially backed company versus Suzlon, they've been relatively safer in terms of the debt part. And not that they don't have debt, but they did not have to restructure their debt. And they've also infused a lot of capital into the business, and they're now trying to reduce or go to zero debt. By the way, Suzlon is now a zero debt company, because in August they raised money from outside investors, and they've been able to remove all the debt entirely. Inox is also going to be debt free very, very soon, or towards the end of FY24 is their target. Now, all of this, all of the buoyancy and all of the positivity is being reflected in the order book, right? The order book for Suzlon stands at around 1500 crores as of July. I've also added some of the newer orders they've received post, and today it stands at 1.9 gigawatts of orders, which is huge, right? So they have visibility over the next 2 years for execution of roughly 700 to 800 megawatts of projects, right? Inox order book is also pretty impressive. The only problem is I don't think it's as robust an order book versus Suzlon, because they have 501 megawatts of LOI. So it's not actually a confirmed order, it's a letter of intent. And to sum everything up, whatever we've talked about, if you look at the charts, you can see that Suzlon has actually done much, much better. And the reason is that the turnaround for Suzlon in terms of the debt going, in terms of the strength of the order book, that is a lot better relative to Inox. And that's why you see the difference in the stock prices. However, in my humble opinion, I think the market has actually factored in a lot of the things over the next 2 years. So in my opinion, I do not think the stock prices right now do not seem to be anywhere close to being comfortable for buying levels. That's just a personal opinion. I could be wrong. And so yeah, with that, hopefully we got a good idea of how the sector works. Hopefully you learned a lot. If you have any questions, please let me know in the comment sections. And thank you so much for watching.